Welcome to the Crypto Daily channel. Subscribe to the channel and like the video for more content. Now for the topic of the day. Mag 7 returns would improve with Bitcoin. Replacing Tesla stand chart. Bitcoin could be viewed as serving multiple purposes in a tech portfolio, paving the way for more institutional buying, the bank's digital asset research head said. A report from Standard Chartered suggests investors should view Bitcoin more like a tech stock than digital gold due to its stronger correlation with the Nasdaq. The report proposes a remodel of the Magnificent Seven tech stocks, replacing Tesla with BTC, which resulted in higher returns and lower volatility on average over the past 7 years. Some asset managers have been advocating for including BTC in investment portfolios for diversification, with BlackRock recommending up to a 2% allocation in traditional stock and bond portfolios. While Bitcoin, BTC proponents commonly view the largest cryptocurrency as a digital version of gold, a new report from global bank Standard Chartered argued investors should see it more like a tech stock with some extra benefits. Led by Jeff Kendrick, the Stand Chart team said Bitcoin's correlation with the Nasdaq has almost always been stronger than with gold, the old-school safe haven asset. While BTC may have a role as a place to hide in instances of financial instability, like the 2023 regional banking crisis or what might be the unsustainable U.S. debt trajectory, the report said, the reality is that there's rarely a need for such hedges, thus its increasing behavior as more like a traditional tech stock. Investors can view BTC as both a hedge against traditional finance and as part of their tech allocation, said Kendrick. But at least in the short term, BTC may be better viewed as a tech stock than as a hedge against TradFi issues, he added. Playing with the idea of Bitcoin as part of a tech portfolio, the report proposed a remodel of the index of the so-called Magnificent Seven, Mag 7 stocks. The mega-cap tech names that have driven overall market returns of late: Apple, Alphabet, Microsoft, Nvidia, Amazon, Meta, and Tesla, TSLA. This new Mag 7B would swap out Tesla for Bitcoin. The result? The Mag 7B produced consistently higher risk-adjusted returns than the original group over the past 7 years, reinforcing BTC's role in a tech-focused portfolio, said Kendrick. The Mag 7B outperformed the Mag 7 on average by around 1%, with nearly 2% lower volatility on an annual basis, a key benefit to institutional investors and large asset allocators, he continued. BTC should be seen as serving multiple purposes in investor portfolios. This would open up the possibility of even more institutional buying, Kendrick noted. Asset managers have been advocating for including Bitcoin in investment portfolios for diversification purposes. For example, BlackRock, the world's largest asset manager, recommended considering an up to 2% BTC allocation in traditional stock and bond portfolios. Meanwhile, asset managers like 21 Shares and Bitwise have launched exchange-traded funds, ETFs, combining gold and Bitcoin as complementary assets. In summary, according to a report from Standard Chartered, Bitcoin, BTC, should be viewed more like a tech stock rather than digital gold. Bitcoin has a stronger correlation with the Nasdaq, making it more suitable for tech portfolios. The bank proposed replacing Tesla with Bitcoin in the Mag 7 index, which includes top tech stocks, resulting in higher risk-adjusted returns and lower volatility over the past 7 years. This suggests that Bitcoin could serve as both a hedge and a tech asset in investor portfolios, potentially increasing institutional interest. Asset managers like BlackRock recommend a 2% BTC allocation in traditional stock and bond portfolios. Thanks for watching. Don't forget to subscribe us.